Let me ask you something. If I gave you a legal way to never pay tax on your profits again, would you believe me? You should. Because it already exists. It's called the TFSA, and it's hands down the most powerful wealth-building tool in Canada. But here's the truth no one tells you. 9 out of 10 Canadians are using it wrong. The TFSA isn't just a savings account, it's a tax-free wealth machine, if you know how to drive it. And starting January 2025, you get another $7,000 in new contribution room. So before you dump it into another 2% HISA, I'm going to show you exactly how to turn that room into a portfolio that builds tax-free income, growth, and legacy wealth. This isn't beginner content. This is the advisor-level blueprint for the TFSA Canada doesn't teach you. Why most Canadians fail at TFSA? Let's be honest. We've all heard use your TFSA, but most people treat it like a parking spot for spare cash. They earn 2% interest, then wonder why their account barely grows. Here's the reality. The TFSA was designed to be invested, not stored. It's the only legal place in Canada where your capital gains, dividends, and interest are never taxed again. Think about that. Never again. No capital gains tax, no dividend tax, no reporting headaches. And yet over 60% of Canadians still use their TFSA for low-yield savings accounts or GICs. Meanwhile, the wealthy use it as a tax-free compound engine, holding ETFs, dividend stocks, REITs, and growth assets that double every few years. Same account. Different mindset. The power of 2025. What's changing and why it matters. Now here's why 2025 is your golden window. The federal contribution limit for 2025 is $7,000, bringing total lifetime room to $103,000 for anyone who's been eligible since 2009. That's 6 figures of capital you can grow tax-free forever. And the real opportunity? Interest rates are expected to drop in mid to late 2025, which means equity markets and yield assets could rise again. If you position your TFSA right now, before the rebound, you're essentially buying tax-free upside at the bottom of the cycle. This is the year to go from safe savings to strategic compounding. The 3 pillars of TFSA mastery. Here's the advisor's playbook, the 3 pillars that turn an ordinary TFSA into a tax-free wealth engine. Pillar 1, structure, how your TFSA is built, self-directed versus bank. Pillar 2, strategy, what goes inside, asset selection plus risk balance. Pillar 3, sequencing, when and how you withdraw or redeploy for maximum efficiency. Let's unpack each one, because the difference between a $120,000 TFSA and a $600,000 TFSA isn't luck, it's structure, strategy, and sequencing. Pillar 1, structure, self-directed advantage. If you've been managing your TFSA at your bank, stop. Most banks limit your investment options to GICs or mutual funds with high fees. A self-directed TFSA gives you total control. Stocks, ETFs, REITs, and growth assets. Platforms like Wealthsimple Trade, Questrade, or Interactive Brokers allow you to build custom tax-free portfolios. Think about it. Your TFSA should look like a mini pension, diversified, growing, and 100% yours. The setup takes 15 minutes, but the payoff lasts decades. Pillar 2, strategy, advanced TFSA allocation, growth plus yield plus safety. This is where most people either win big or waste decades. Inside your TFSA, you want balance, not just safety. Here's the advisor-approved allocation model for long-term compounding. 40% growth engine, Canadian plus US equity ETFs, like VFV, XEQT, or ZSP. 30% yield engine, covered call ETFs, dividend stocks, or REITs, like high-yield ZWB HMAX. 20% defensive buffer, short-term bonds or HISA ETFs for liquidity. 10% opportunistic capital, high upside plays, AI stocks, niche funds, or corporate bond discounts. Why this works? Growth compounds tax-free. Yield produces passive income with zero tax drag. Safety gives you flexibility for rebalancing when markets dip. Over time, this mix produces both cash flow and capital appreciation, and every dollar stays yours. Pillar 3, sequencing, the tax-free recycle loop. Now for the secret sauce: sequencing. Every time you make a profit inside your TFSA, don't just withdraw it. Recycle it. Let's say you buy an ETF at $50, sell it at $70, $20 gain tax-free. Withdraw in December? Redeposit in January with the new contribution room. You've just created a tax-free profit recycling loop. That's how advanced investors build six-figure TFSAs, by compounding and resetting capital every year. The CRA doesn't limit your profits. They only limit your contributions. The rich understand that. Most people don't. Common TFSA mistakes that kill growth. Let's talk about the 5 most common TFSA mistakes I see and how to avoid them. Mistake 1: withdrawing and redepositing in the same calendar year. That triggers overcontribution penalties. Avoid it. Wait until January to redeposit. Mistake 2: holding US dividend stocks directly. Those are subject to a 15% withholding tax. Use US ETFs inside RSPs, not TFSA. Mistake 3: trading too frequently. If CRA deems your TFSA as a business account, you can lose tax-free status. Mistake 4: neglecting contribution tracking. Overcontributing = 1% monthly penalty. Mistake 5: using it as an emergency fund. Pulling out cash too often destroys compounding power. Remember, the TFSA is your forever account. Treat it like a business, not a piggy bank. The 3 TFSA portfolios, example scenarios. Now let's see what this looks like in real life. Scenario 1: the cautious saver, age 25-35. 50% broad market ETF, 30% dividend yield, ETF 20% cash buffer. You're building tax-free momentum with flexibility. Scenario 2: the growth builder, age 35-50. 60% growth, ETFs, VFV, XIC, etc. 25% dividend yield, 10% bonds, 5% high upside tech, AI play target. $500,000 TFSA in 20 years, tax-free. Scenario 3: the pre-retiree, age 50+. 40% covered call ETFs, 30% bonds, HISA, 30% growth equities. Target: $2,000, $3,000 month tax-free income stream. Same account, different goals. One tax-free plan. The emotional refrain: TFSA as legacy wealth. You know what's crazy? Some people still think the TFSA is just for young investors. But think about what happens when you pass on a TFSA worth $500,000 to your spouse or kids, tax-free. You've just created multi-generational tax-free wealth. This isn't just about investing. It's about control. When you build your TFSA right, you're saying, I control my money, not the market, not the government. Every January 1st, the CRA gives you another $7,000 opportunity. Most people ignore it. But you'll treat it like an annual launch pad for freedom. Let's recap your 2025 TFSA strategy roadmap. Structure: move to a self-directed TFSA. Strategy: balance growth, yield, and safety. Sequencing: recycle profits, don't withdraw wastefully. Avoid mistakes: timing, US dividends, overcontributions. Build your long-term plan: tax-free income for life. If you found this breakdown valuable, drop TFSA plan in the comments and I'll send you my free TFSA allocation template. Subscribe to Financial Mo for deep Canadian finance insights. Not the beginner stuff, but the real playbook advisors use to build wealth. Because your money deserves better than a savings account. This is Financial Mo. See you in the next one.